My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to a special West Coast edition of Mad Money, coming to you from one market in San Francisco. Welcome to Cramerica. If you want to make friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate and to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. The promise of artificial intelligence, it's here. But how about the profits? I'm calling them elusive. That's my takeaway from what I've seen this week at Dreamforce. That's the world's largest AI festival, brought to you by Salesforce. So many companies are going to be judged by how well they incorporate AI, meaning the market's fortunes will often be controlled by this huge chasm between hope and reality, which at times seems as wide as the Grand Canyon. Worrisome. So after today's day where the Dow slipped 70 points, S&P inched up 0.12%, NASDAQ advanced 0.29%, we need to talk about the state of artificial intelligence. I came out here to figure out how much of AI is hype and how much could be real. I managed to pull up with about 24 executives out here and IT professionals, by the way, and I've reached a conclusion in search of an answer. My conclusion? The use cases for AI, the profitable ones, are almost entirely uninteresting, unseen, soporific. But they work. They're invisible to the naked eye, yes, unless you're a chief financial officer. In short, this is an incredible technology for executives looking for cost savings. But for everybody else, it's borderline meaningless, at least when it comes to earnings. For now, although it can be a lot of fun. Let me make this point from the outset. Artificial intelligence is the dominant theme of this market and possibly the economy as a whole. Yeah, it's that big. It's kind of the point where the Senate's holding closed-door hearings on the topic. Senate Majority Leader Chuck Schumer bringing in AI's brightest lights, including Tesla's Elon Musk, Nvidia's Jensen Huang, Meta's Mark Zuckerberg, and Sam Altman from OpenAI to talk about AI regulation. This array of the world's richest people being called to Washington should not be lost on you. AI is too powerful to let go unchecked, especially when we have no idea what it could do down the road, possibly a great deal. And if unchecked, not all of it good. But this show is not mad regulation. It's mad money. For us, what matters is whether artificial intelligence can help companies make or save money, and right now it's a mixed bag. Therefore, it's a mixed bag for stocks. AI is already about to have a profound impact on the bottom line, but the operative term here is about. It's not having a big impact yet. Why? Well, it turns out that harnessing AI is really expensive up front. So the only company that's really making a fortune on it at this very moment is Nvidia, because their chips are the upfront cost. Even for them, it's not a cakewalk. Nvidia's Jensen Huang spent billions of dollars over the years developing these super fast, incredibly powerful graphics cards that, when bundled, can handle any amount of data. Expressed in terms, frankly, it implies something that's way too big for our minds to comprehend. A lot of flops. You can't really reap the benefits of exploring and questioning your own data. Yes, you question it in plain English, no less, which is why Nvidia is selling billions of dollars worth of these cards to anyone who can afford them. But who can really afford them? How about Amazon, Meta, Oracle? I mean, really gigantic, which is, by the way, Oracle's been hurt by the build-out costs. Nvidia simply cannot make enough of these chips to meet demand. Call it a high-quality problem. Everyone else, though, they're just ramping up. They're just finding out. They're just learning. And you don't get paid by customers to learn. So then, why have hope? Simple, because even though AI might be boring to the consumer, the enterprise use cases are so palpably obvious that businesses would be nuts not to embrace it. Take the banks. They have a huge number of employees and end up with a gigantic number of wasted man hours. But Salesforce's generative AI platform, Einstein, which is being used by a lot of the biggest banks, can draw up simple loan documents, freeing up a huge amount of time for loan officers to go out and write more lucrative loans. You can ask Einstein in plain English whether there's a good chance the borrower might default, and it'll give you a helpful, more accurate answer than any person in your organization. Given that your data has billions of pieces of information that can give banks insight into potential default, what can they do? Well, they can cut down the number of mistaken bad loans from the get-go. And because Einstein, that little genius, understands all sorts of languages and doesn't need code to ask questions, there's a whole layer of people who can be laid off when the banks start using the platform. Low code, no code equals fewer expensive hires who produce no sales, a la Deadwood. You could see a dramatic increase in efficiency at JP Morgan or Bank of America, say, because they're heavy users of this kind of technology. That's huge, because right now banks trade more on efficiency ratios than any other metric, including that so-called net interest margin that everyone used to talk about. You might think making banks more efficient is the most boring use case imaginable, and it sure is. But let me do one better. Let me really put you to sleep. Insurance. What matters most to insurance companies? Precise data that lets them make precise decisions on who to sell insurance to and how much it should cost to them. Everybody's different. Take a look at the stock of Progressive. A rocket ship on fire. I think that's because it uses its own data and using generative AI more than almost any other insurance company. You can figure out risk far more effectively than the smartest people in the industry. Therefore, Progressive makes far fewer mistakes while writing insurance policies. That will be immediately and surprisingly positive, probably even this quarter. That's what the stock seems to be saying to me. But it is among the least exciting stories in the world. Now, you can say the same for another real boring one, car dealers who want to price in risk for auto financing. Again, huge saving. I think the drug companies could save billions of dollars in research costs because they have so much predictive data. It's just that the human brain isn't big enough to process it. You take humans out of the equation, you let AI go to work, and drug companies will be able to make much better decisions about whether to go or no go forward with incredibly expensive clinical trials. You just don't see the benefit here unless you're running a business yourself. Yet you can get terrific margin expansion, which is what happens when companies replace lots of non-revenue generating employees with machines. Machines, by the way, that make far fewer mistakes and can pivot really quickly if they do, unlike humans. Most of my other attempts to plumb the canyon between the reality of AI and the hype yield lots of once-in-a-lifetime claims that AI can help every business. But those claims need and were not backed up that I saw by results. I actually think Salesforce has the ability to explode its earnings higher after showing off Einstein's capabilities, getting a lot of contracts, because I met users who are thrilled so far with what they've seen. For instance, we're going to hear from one of you. We're going to hear from Laura Albert. She's the CEO of Williams-Sonoma later tonight. AI is actually helping her grow sales. That's what you really need is top-line growth. It knows your shopping tendencies. It knows to send you enticements to buy a Breville toaster because you shelled out $1,500 for a Breville coffee maker to create fabulous espresso martinis, and don't forget to add the Baileys. Now, I said that Williams is already harvesting AI very effectively, but I think Williams-Sonoma may be a very special case because for years the company's been a digital-first retailer, reaching you wherever you might be. Not many others can make that claim or have enough digital data for you. Perhaps the biggest winner from AI, it might be, this is incredible, it might be the Federal Reserve. In the end, generative AI is about eliminating the waste and friction of commerce. Yes, it's about productivity. That means doing more with less. As Jeff Lawson, the CEO of Twilio, told us out here, it means getting 10 times as much done for 1/10 the cost. I like those ratios. Music to the Fed's ears. Yes, the Fed loves to hear that. Just what they needed after we saw a slightly higher than expected consumer price index number today. Bottom line, the use cases for AI, they may not be exciting, but they're giving us one more reason to keep owning some really high-quality stocks because these productivity improvements will show up in the numbers someday. No, not quite yet, but certainly soon enough to make the market go higher if it's used and produce stocks that you can own for the long term. I'm taking calls. I am going to Luke in Maryland. Luke!
Hello.
Hello. All right, Luke.
So,
yeah.
I was wondering, what are your thoughts on like the Nike stock? Is it a definite buy? Should I hold?
Nike has low energy, Luke. It's got very low energy. And I don't see the stock doing much at all because, frankly, it has low energy. Can I go to Bill in Massachusetts, please, Bill?
Professor Cramer, booyah.
Oh, man, I always like to get tenure. I mean, it's incredible. You have it for a lifetime. That's what's so great about it. Don't have to even teach kids. What's up, Bill?
There you go. I'm a second-year club member, fourth-time calling. The access to you is just incredible for club members. I love it.
Bill, I wouldn't have set up the club if I didn't like to talk to the club members. I mean, I'm walking down the street on Wall Street, and I see people. I say, man, you ought to join a club. Yeah, they asked me about a couple of stocks. Just join the club. How can I help?
I wanted to ask you about how and if AI could help DuPont.
All right, that's a great question. Let me tell you, I'm going to give you an answer that's pretty straight. The guy who runs it is Ed Breen, okay? Ed Breen is going to figure out a way, because Ed Breen's one of the smartest CEOs in the country. If someone says to him, listen, and he's surrounded by young people who are really smart, I think we could do well in resins and printing and medical devices if we use AI, he would say, okay, let's go sit down with Benioff. As a matter of fact, he's a Philadelphian. He was a neighboring school district for me in my class. I may have to give him a call. I'm going to give him a jingle and tell him he ought to do some AI. I like that call. Mario in New York. Mario.
Hi, Jim. Good
Mario.
to talk to you.
What's happening?
Jim, my wife and I listen to you all the time. You're our favorite guy to watch. It's NBC. Okay, listen. The question I have, about a few months back, I was watching your show, and I noticed one of the stocks you liked was Wingstop.
Okay. Yeah, Mary, Wingstop's terrific. I mean, it's had a couple of weeks that were down. I mean, it had a gigantic buyback. It's then walked away. The food stocks are going not so good. There are people talking about it having a death cross. I mean, give me a break. Wingstop is one of the try to get one of those franchises. It's the toughest franchise in the world to get. And they're expanding all over the country. I like them. The use cases for AI may not be exciting, but they're giving us one more reason to keep owning quality stocks on Mad Money tonight. SoFi stock has been hit in the last month, erasing all of its post-quarter gains. Are investors getting a buying opportunity in the tech-based stock that did double after we had them on last time? I'm going to check with the CEO. Then Williams-Sonoma, as I just mentioned, can add a dash of spice to your home. How about your portfolio? Don't miss my exclusive with the company's top brass. And when we came out here to San Francisco, we like to get to know disruptive private technology companies that could signal where the industry is headed. So tonight I'm sitting down with the founder and CEO of Discord to see how the social media app is shaking up the space. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.